Hello and welcome. Today we're going to be talking about your complete guide on how an LLC works. I've talked a lot about LLCs, pros and cons, ups and downs, why not. But this one's going to be a little not necessarily nuts and bolts, but just a high-level understanding so that when you're starting an LLC that you can get an idea of what you're looking at, what it is, because it can be a little confusing. There's a lot of information out there, and so I really wanted to nail down what it is that you can expect as an LLC owner, or if you're getting into it, whatever you may be. If you're new here, my name is Taylor Darcy from Think Legal, where I help you create the business of your dreams. So welcome. I'm happy to have you here. We go live Monday through Friday, 11 a.m. Pacific Standard Time to answer topics, to talk about topics, discuss answers to questions, things that I get on a regular basis, things that I want to help you with. So please tune in live to get your answers, get your questions answered. And let's get started. All right, so the very first thing that you have to know about an LLC is that it is organized by the state. It is a state-run entity, or I shouldn't say run entity. It's a state-authorized entity. There we go. That's the correct way of saying it. So what this means is that the laws that are surrounding an LLC are completely governed by state, as opposed to other entities. Like if it's just a personal entity, a sole proprietor, then it's between you and the other person. So that's a very important distinction, because there are laws that you have to be aware of as an LLC owner that you don't have to worry about as much so as a sole proprietor or even a corporation, because although the LLC is similar to a corporation, it's not the same. And anybody that says otherwise, it's not this is a funny one, but it's not a limited liability corporation. That does not exist. There's no such thing as that. It's either a corporation or a limited liability company. Now, I know that that may seem like splitting hairs and yeah, whatever, who cares? What's the difference? But the reality is that the laws are different, and you do need to be made aware of them so that when you're thinking and planning and doing, that you're not thinking of a corporation that has different requirements than an LLC. So it is completely state authorized, which means that you can lose your state authorization if you don't do the things that you're supposed to do as an LLC. So it's very important that you understand that it's a construct. It's not a absolute. You don't have an absolute right to an LLC, and the state can take it away from you if you say don't pay your taxes, is the number one way that it gets suspended, or if you're using an LLC inappropriately. So that's another way that it can negatively affect you if you choose to not pay attention to the laws of an LLC. So that's number one. It's organized by the state. An LLC creates a legal entity and barrier against attaching, and attaching is a legal term, and we'll talk about that in just a second, personal assets for business debts. Okay. Attaching means putting a lien or a claim on other property. So for instance, when you have a mortgage, you own the property, but there's a lien against the property for the mortgage. The same thing can happen if you are sued and found, if the judgment is against you, and now the opposing party has a judgment against you, they can put a lien on your property. That's what it's meant by calling attaching a lien to your personal property. So an LLC takes and says, no, we are only going to be able to attach business assets, okay, or assets are in the name of the business. So if you own especially real property personally, then putting your business property in that LLC is how you handle that. So that if if your business gets sued and then it gets attached, if there's a judgment against your business, then it attaches your business assets only and precludes them from attaching your personal assets. That's a very important distinction or detail that you need to be aware of. The LLC creates like a bubble. Okay, nice little bubble here. Everything in the bubble is accessible for judgments of creditors or debtors, creditors for business debts. So everything in that bubble is able to be attached. Everything outside the bubble, unless they pierce the corporate veil, we're not going to talk about that, but just keep that in mind. There are exceptions to that. Everything in that bubble stays in that bubble. So they can only get at those things within the bubble of an LLC. Unless they sue you in your individual capacity, because they can show that you were negligent in your individual capacity. And we're not going to go too much in that, but that's one of those factors. So that's number 2. It's a legal entity created by the state, and it's a barrier or a shield against someone taking business debts and attaching to your personal assets. Again, it is not unlimited. It is a limited liability. So it's limited to those debts inside that company. The next part of an LLC is it allows you to deduct, not all, and this is not a tax answer, so you need to speak with a CPA or an accountant. Doesn't necessarily have to be a CPA. Or a tax preparer, but allows you to deduct expenses that are related to the business. Now, in keeping with the tax code. So that's why I say that you've got to consult your tax attorney or a tax consultant or a CPA, because not every expense that's business related is actually deductible depending on the tax code and the thing that you're doing with it. What does that mean? So you're running it like a business. It is a business. But what I mean by that is that as opposed to a personal thing where personal expenses apply, you now have business expenses. There's a clear differentiation between your person and your business. And it's very important that you keep that in mind, that you're just because you can deduct something doesn't mean you should deduct something, because it can create red flags with the IRS, but we're not going to talk about that. But the idea is you can deduct expenses, and it's easier to separate because you're going to have a separate bank account and you're going to have only business assets or business expenses coming out of that business account, nothing personal. So that's number 3. In a LLC, the members own the business, and in a member managed business, they're the ones that manage it. Now there are what's called a manager managed LLC, and that's just a different way of doing it. It's based on what you want. Most of them start out as member managed LLCs and stay that way because they're the people that's the manager is the same. Now, if you hire somebody, you can change it to a manager managed LLC if that works for your business plan and strategy. So you're the owners of the business, much like the shareholders are the owner of a corporation, or as a sole proprietor, you're the owner of everything. So the LLC is that in between of those things. And so you really want to make sure that you're picking the entity that's right for you and doing the best that you can. The next thing, and this is probably one of the more tricky concepts, an LLC creates what's called pass-through taxation. For IRS purposes, a single member LLC is what's called a disregarded entity, which means all the profits and losses just go directly to you as the sole proprietor. The IRS just kind of just says, okay, we're just going to tax all of the profits or the net revenue on the business. And so that's how a straight LLC works. Now, in some instances, you can do what's called an S-Corp. Now, an S-Corp is a tax designation. So that's done by the IRS. You have to elect it separately, but an LLC can have either. And we're not going to go into too many of the details, but you have to pay yourself a reasonable salary, and then you deduct that expense as opposed to it being a pass-through entity at that point. It's different, and in some instances that makes sense, and in some instances it doesn't. Again, you want to see a CPA to decide what's right for you individually, but that is possible, and that's a great way of saving money on taxes and getting a better feel for it. So that is the high level, how does a LLC work, right? Those are the details of what you need to know and how it works for you. As a side note, a bonus thought, you need to have an operating agreement, an EIN, and a business license if you're going to do that. You just have to. Like, people that say you don't are not following what you should do. And this is where I was saying, if the state wants to take it away from you, they can. They can for whatever reason. And it's rare, but it does happen. You don't want to be that person that it gets taken care of or taken away from because you made that choice. So always do your due diligence. Make sure you're following the law. Make sure you're keeping up with the LLC rules, because they do change from time to time. Or hire an attorney to do it for you if you really don't want to. And I couldn't blame you, because most people find that stuff completely, terribly boring. I enjoy that stuff. I like getting into the nitty gritty of things and finding those little things that matter. So please keep that in mind, that you want to make sure you're following these things and you're going to follow the corporate formalities. If you've gotten value out of this video, please don't forget to hit subscribe and like, and hit that bell icon to be notified of when we go live, and we'll see you later. Have a good one.